Hello, Theo traders. Gianni DePoce here, and today is the 30th of July, 2024. And I'm really looking forward to reviewing some charts with you today because markets are on the move and it's mainly on the downside. We had some sustained selling pressure last week, and markets had a little bit of a rebound on Friday, but we're still seeing that pressure to the downside here this week. Take a look at the S&P 500. We were down a little bit more earlier today, catching a little bit of a rally here so far, but much of the weakness is coming from the tech sector. And you can take a look at the NASDAQ here, down over 1%. We did take out last week's low as well. There is a bit of bullish divergence in price from the RSI indicator here in the NASDAQ, but I must admit that I'm not all that excited about the prospects for the tech sector in the coming weeks. We could see a little bit more downside, and if we do, it may be a buying opportunity. But right now, I think most of the strength is concentrated in the Dow, in kind of those more defensive elements of the S&P and just the overall stock market. The top performing sector in the S&P 500 last week was healthcare, and if you zoom out over the last month, it's real estate. So you're kind of seeing markets readjust to the prospect of rate cuts on the horizon. Real estate or interest rate sensitive segments of the market are starting to outperform. And while many may be cheering about the prospects of more liquidity in the market, we also must contend with the probability of an economic slowdown and just even potentially a recession. But it's not all rainbows and butterflies when it comes to rate cuts. It does mean that the economy is no longer able to handle those higher rates of interest, and the Fed is going to be adapting accordingly. I don't think they're going to raise, lower rates tomorrow on the July 31st FOMC meeting, but it is all but a lock for the September meeting for rate cuts, and that's going to be the first rate cut of this cycle, and it's the last meeting before the election. So, political winds do keep shifting seemingly every other day, and I do think that's a big risk for markets going into year end. But I'm actually looking for a situation here amongst the indices where the Dow can rally to a new all-time high. I don't know if the NASDAQ's going to be able to do so before the Dow actually peaks here. There's quite a bit of resistance here in the NASDAQ in the 19,800, $20,200 area, kind of that, $200 to $400 technical zone above this market. But this kind of looks like a bear flag, and it's not really giving me a lot of excitement in the tech space. If you take a look at chips and semiconductors, they are bearing the brunt of the sell-off. They are outperforming to the downside, which does pose some serious risks for this market. You take a look at NVIDIA, still selling off. AMD is weak. Micron's weak. All across the board. Amcor, this was a stock that we covered recently, got out of our long positions for a nice profit right in this area in mid-July. And good thing we did, because this thing's getting clobbered. Obviously, you still have some issues with CrowdStrike, another leg lower today. I've seen that resolution from that bear flag pattern and just tremendous loss of capital on this stock. If you look at some of the big tech names like Apple, kind of holding its own here. Microsoft down, looks vulnerable. Google hanging out. It's bouncing off support here. We'll see if it can recover. But I'm also a little concerned with what's happening in Amazon. So when it comes to the big tech segment of the market, I do think some caution is advised here, and we should not take the rally that we've seen over the last several months for granted. Now, what I am liking in terms of price action is what's taking place in precious metals. Gold really close to making a new all-time high. We did just roll contracts over to December. So when you look at the December contract, it doesn't look as bullish as the continuous contract, but we are coming off of a higher low with respect to the trend, which is bullish. Now, when I look at silver, this does get me even more excited because I think there's tremendous value in silver, and I'm looking for it to rally to 34 pretty quickly. And what could be a macroeconomic catalyst behind that? Well, obviously rate cuts, but if you take a look at bonds, you're seeing duration lead on a percentage basis to the upside. Now, depending on what the Fed says tomorrow, I wouldn't be surprised to see bonds rally up and retest the highs from December of 2023. But the fact that you are seeing 10-year notes lead on this rally to the upside above the 30-year bond is a bit of a cautionary signal. And you can even take a look at the 2-year note, which is something that I like right now. I think you want to get a little bit of duration, beyond a year, but anything more than 5 years is kind of a gamble. So I think if you narrow down into that 1 to 5 year period, I'm focused more on the 1 to 2 year period for some actual capital appreciation in the bond market. And you're looking at rate cuts. Those bonds that are being issued today will be worth more during that time. And what's going to happen is that as interest rates come down, it's going to increase the appeal of precious metals. And it's starting to transpire now as some of the names that we've been tracking in this space continue to hold up well. Anglo Gold Ashanti, Agnico Eagle Mines, seeing a big bid. Wheaton Precious Metals coming up off a higher low. Pan American Silver, a nice day today, up over 2%. And of course, there's Eldorado Gold, which just turned positive on the day as well. So don't sleep on precious metals. I think we're still early, and it could be a really wild ride going into year end between GDX and SIL. Now, speaking on the topic of metals with respect to base metals, copper, Dr. Copper is flashing a warning sign. This does not look like a market that is signaling tremendous economic growth ahead. Between the re-steepening of the yield curve, bonds bidding, dollar up, copper selling off, crude oil coming down, this does look like a market that is starting to price in the risks of recession. And I've been probably one of the biggest bulls here at TheoTrade, aside from Corey Rosenblum, over the last year. But I have been looking for a substantial pullback in stocks this year, and I think we're coming around to that scenario sooner rather than later. But again, I'm not closing the door on the possibility of a new all-time high in the Dow. I just don't think it's going to happen in the NASDAQ. And usually when you see semiconductors and tech lead the market lower, again, those are the leading sectors. They tend to lead the price action of the rest of the market a few weeks in advance. So we might get another new all-time high in the Dow here, but it may be an area to capture additional profits and to look for more defensive elements in the market. Let's take a look at cryptocurrencies. Bitcoin did have a good weekend, but it is seeing some sustained selling here. Ethereum was up today. It's also in a broader consolidation. So, some of the names that we've been watching in this space, MicroStrategy, Coinbase, showing some vulnerability here, but we'll let the Fed do its thing tomorrow, and maybe they can kind of walk crypto back from the cliff. But I do want to turn your attention to what's happening in the Japanese yen. This is some very important price action. We've had some longs on the Japanese yen in the TheoTrade chat room for good reason, because I think some long-term cycles are unfolding in the space. You can take a look at the Japanese yen against the euro, the Japanese yen against the Swiss franc, the Japanese yen against the Australian dollar, the Japanese yen against the Canadian dollar, and across the board, you're seeing a significantly strengthening Japanese yen. And it's because the carry trade is becoming weaker. Now, if you take a look at the dollar against the euro, you're actually seeing a bid. And remember that this is going to be reflected in the dollar index because the euro is more than half of that weighting. But the weakness in the yen is going to be a bit of a headwind for the dollar index. I think it's around 13-14% of that basket, but it's predominantly the euro. The euro is vulnerable, but kind of to play devil's advocate here, if the Fed comes out and is extra dovish tomorrow, then I wouldn't be surprised if the dollar sold off a little bit against the euro, and that could be a catalyst for a rebound in stocks, a rebound in crypto, and an acceleration in precious metals to the upside. I would actually argue that precious metals may have the strongest bull trend from a technical standpoint in this market right now, aside from the Dow, which is coming up off a higher low after recently making a new all-time high. But no other market out there is really exhibiting a series of higher highs and higher lows like precious metals are. So this is something to keep an eye on. We've been in these trades related to precious metals for many months, and I don't think you want to ignore it. We'll keep you posted on those. And that's all that I wanted to review for now. So thank you so much for watching, and I hope to see you in the TheoTrade chat room.